Up until the last 30 days or so, oil was having a magnificent run, hitting nearly $80 a barrel. It was at its 4-year high. However, things really started to change around October. Due to a number of reasons, oil's direction took a huge reverse. To make sense of the tumble in oil prices in the first half of November, one first needs to understand the major factors that push oil prices altogether. You have the supply and demand, which is often the two-part explanation for movements in price, and then you have market sentiment. And the very drastic actions that the United States government was taking did play a big part in shifting market sentiment. In the case of oil, it is often supply that moves the market the most. Why? Supply is largely controlled by a few big players and OPEC. OPEC supplies roughly 40% of the world's oil supply. This cooperation between these nations involved in OPEC for much of history has meant that the major oil countries are on the same agenda, and the cooperation has been the benefit for most parties. So while things were going well for oil prices, they experienced an even stronger push when Trump started to impose sanctions on Iran. It's no secret that Trump doesn't have a whole lot of love for the Iranian government. Almost immediately upon becoming president, he spoke about pulling out of the Iranian deal, something that they have done. Iran's economy is highly dependent on oil, and these sanctions on Iranian exports were believed by most to hurt the country, with every intention of doing so, to have them engage in a dramatic shift in their behavior, as the Iranian government for long has left a trail of support for militia groups and other dangerous organizations. Politics aside, with the new sanctions the US imposed, one does not have to go far back in time to see the economic effects. If you look at Iranian exports of oil, you can see from this graph a huge drop in oil exports engaged around 2012. Iran was imposed similar sanctions in 2012 under the Obama administration. They were playing hardball in order to get their intended outcome of swaying Iran out of nuclear developments. And it worked. In 2016, the Iran nuclear deal was struck, and when economic sanctions were lifted, you can see oil exports for Iran starting to rise again around 2016. Iran has somewhat of an anemic and lackluster economy, one that is highly dependent on oil. Sources from 2015 suggest that nearly 70% of their national budget is from the export of oil. Quite a substantial amount, as they do supply roughly 10% of the world's oil demand. So how does this all relate today? Well, the sanctions Trump imposed meant a constraint on the supply side. Given that the power the United States has, when they impose sanctions, other countries tend to comply. And when they chose to impose sanctions on Iran, this meant that other nations who did buy from them would be subject to a lot of scrutiny and punishment, so most would not. With a lack of demand for Iranian oil exports, less supply would mean higher prices. It was estimated that Russia and Saudi Arabia would cover some of the ground that would have been covered by Iran. But for the most part, the estimates were that they wouldn't cover it all, and so oil prices rose. But unanticipated by most, Trump announced he would grant waivers for just not 1 or 2, but 8 countries. What this means is that the supply side that was expected to be alleviated began to resurface, and oil prices took into turmoil. Furthermore, countries around November began to put their foot on the gas pedal and accelerate production and therefore supply. This was not much cause for concern, but nevertheless did exert downward pressure. OPEC countries began to up their production by 100,000 barrels a day, reaching a high of 32.7 million barrels a day. And the United States had their production climb to a record 11.6 million barrels a day for the week ended November 2nd, again adding to the oversupply issues. So here we are now with oil taking a massive tumble, hitting about $50-something a barrel. And where do we go from here? Well, the huge drop in price is not really fully based on fundamentals, but rather a huge drop in market sentiment. Tensions between these two nations are increasing, and Iranian officials have been quoted as saying if these sanctions are not lifted, that they have every intention to sell their oil in the black market. You can expect both sides to continue to go back and forth. This uncertainty has caused a lot of fear in the market and is another reason for such a massive decline. There's too much uncertainty and the market does not like uncertainty. We don't know the magnitude of these sanctions imposed, nor the degree to the waivers. Many government officials for these respective nations and relevant parties have declined to comment. You can expect considerable turmoil in oil prices and the market for the foreseeable future. Though we never point out to exactly where a bottom is, it does look like oil prices are hitting near a bottom. And with this in mind, it may be in one's best interest and be prudent for them to take a position in going long on oil. And if you have every intention in doing so, one investment position that we're looking at is UWT, Velocity 3x Long Crude Oil. It's an investment fund that is leveraged 3x the price of crude oil. So in other words, for every cent oil moves up or down, the respective security moves 3x in the same direction. Whatever position you may take, know that oil markets are considerably risky and volatile, and you shouldn't expose too much of your portfolio to it. We want to thank you guys for listening. If you like our content, don't forget to turn on notifications and subscribe, and follow us on the various platforms listed below. Thank you for listening and have a nice day.